We are just half an hour away from the opening bell. Hong Kong, Shanghai, and Shenzhen. You're watching the China Show. I'm David Ingles with Yvonne.
Our top stories this morning: Asian bonds tracking gains in U.S. Treasuries with weak factory data boosting Fed rate cut bets, and oil holding losses this morning on concerns over the OPEC Plus plan to boost supply.
Now, shares of Toyota in Tokyo dipping as authorities raid the company's headquarters over a safety scandal that's prompted a suspension of sales and deliveries for 3 models.
And I'm Haslinda Amin in New Delhi. Official vote counting is set to begin this morning, with investors already cheering a third term for Prime Minister Modi.
And at the top of the show, of course, as has mentioned, it looks like we're continuing to watch those nifty futures here, which continue to point a little bit more on the positive side of things. Official vote counting, we're expected to hear some results possibly in the next hour or two there. So keep that in mind. We'll bring it to you once that comes through, this election result. But yes, it looks like the Prime Modi is set for that third term. But overall, broadly speaking, we are seeing a bit of a decline when it comes to stocks here this morning. We talked about what we saw in the U.S. session, right? So maybe bad news is finally bad news for these equity markets. When you take a look at, we saw the ISM data, the GDP, the Atlanta GDP number, which did show that maybe there's some signs of a slowing in this U.S. economy now. And that really sent this Treasury market rallying here. We stabilized a bit here in the Asia session, but we're still talking about a 481 for your 2-year yield. We're at 440 for your 10-year yield. Now we're back to those levels that we haven't seen in maybe about a week, more than a week or so. And we're seeing that follow through across Australia, down some 5 basis points for your 10-year, and JGBs as well. We're watching, of course, that dollar seems to be stalling a little bit as well. We're seeing a euro that's at 109 levels here right now, ahead of that ECB decision this week. And we are breaking around that support of 156 for dollar yen. We did hear from Suzuki-san, the finance minister, basically confirming that they did intervene last month as well. Oil markets very much in focus. So we talked about this yesterday. We finally got the news of OPEC Plus, but it took a day for oil markets to react, right? The fact that they're going to be unwinding these production cuts by maybe October of this year really did send some shockwaves to these oil markets. We saw about 3% drop for Brent and WTI. We're seeing that in Shanghai crude here. We're close to about 4% losses here right now. We're talking about $78 for Brent as we speak. It's interestingly enough, though, we did hear that call from Goldman this morning saying that when it comes to MSCI Asia ex-Japan, they are looking more favorably now. They're upgrading their targets to 615 right now. So really talking about, or 850, I should say, from 615. But they're talking about the upgrade in earnings growth. They're also bullish on China. So that's really what's driving that. When you take a look at that Golden Drive, it didn't really do much overnight. But really, when you take a look at what's the setup in Hong Kong and China here today, obviously we had that massive rally in tech yesterday. We're still tracking that to see if that continues for another day. Looks like we are still set for declines at the open, and 725.27 for the currency, Dave.
Yeah, we're still looking for those, higher and higher lows there on the index. Certainly that gave us something to think about yesterday. Although when you look onshore, one of the things that we're looking at underneath the hood is really this turnover that's really come down a lot. I should mention that if you compare your sort of 50-day moving averages all the way back to early days of May, and when that rally was really heating up, so at least in some ways participation has sort of evened out. Southbound flows, more on this in a moment here, and while you look at that, some of the moving averages we're looking at here in terms of support levels, 13 straight days of southbound flows, net southbound flows into Hong Kong. And as Yvonne was talking about as well, we're down 4% on oil prices, give or take, from this time yesterday, including the contract in Shanghai. So we're looking at some of these big names like CNOOC, PetroChina, Sinopec, China Shenhua, and this big SOE counters traded, of course, here in Hong Kong and also up in mainland China. Back to the U.S. story, though. So the ISM numbers overnight missed just about every single forecast, and we're going into the JOLTS numbers coming through later today, where possibly we are expecting a softening of the labor market to show up in that set of the sample size of numbers coming through.
Yeah, and keep in mind the big jobs report is on Friday as well. So if we continue to see more of this, slower prints when it comes to the data, I mean, does that mean that we need to start bringing Fed rate cuts back onto the table? What does this mean for equities overall? Because given it seems like this was really a rally that was driven by a lot of fundamentals as well. Let's bring in Gareth Nicholson, CIO and head of discretionary portfolio management at Nomura. And Gareth, it's interesting how the market has reacted to the data we've seen out of the U.S. of late, where it actually is negative news when we see a weaker print. Is U.S. exceptionalism now in question?
Well, I think U.S. still remains exceptional. The economy still remains very strong relative to other big economies in the world. But yields are following suit. We have. The market really did price in, 7 rate cuts at the beginning of the year. Then it's come down to 1.5 now. That move has been super, super fast. That aggressiveness of the move needs some pullback. And we are now seeing market participants saying, as you said, maybe it is time to put another rate cut on the table. They're looking at ISM. JOLTS data is expected, like you said, to be soft and non-for payrolls, also under 200 again. I think this is just going to be the volatility we're going to see in the rates market. Higher for longer will remain. U.S. Treasuries at this level will remain quite high, but we're not going to see a strong change in that until we see a big change in the inflation print, which still remains pretty sticky.
Yeah, and with nominal yields where they are, your suggestion is just lock in income while you have it at this point in time. If you could just elaborate on that idea there, Gareth.
Absolutely. So if you think about a lot of investors either did two things. They went very heavy into equities, and that was a strong trade. Or after the 2022 scare, they decided, I'm getting paid to be patient in fixed deposits in a very short paper. And they put a lot of cash into that space. Now, with cash rates where they are, with banks obviously going to be forward looking, they're going to look at the 1-2 rate cuts price in 2024, another 4-5 in 2025. And they're going to start looking to decrease those deposit rates. I think it's a great time for investors to start saying, how do I lock in these high yields for longer than just 12 months, for the next 2, 3, 4 years? How do I get that buoyancy in the ship so I can keep afloat, and then I can look to speed the engines when I'm above the water? And that play is becoming really interesting. It's not just US bonds that are looking interesting, it's also other markets where the bonds at these yields are looking quite compelling. So I think a diverse income solution tying in the magic 7% we like is very interesting for clients at the moment to lock in a longer yield.
And Gareth, I'm curious, since you brought up the Mag 7 just now in your last point there, do you get questions around what would give investors the better total return, the better total return over the next, let's say, till the end of the year, whether it's fixed income or this equity market that keeps giving?
Well, look, the 60-40, which is the traditional, way of looking at the markets, the older way, the equity market has by far done more of the heavy lifting than most. Will it do most of the heavy lifting going forward? Probably so for the rest of the year. But we actually think a better mix is adding, taking away the 60-40 and adding a large amount in alternatives at the moment. I think those are very interesting. So as much as 20-25% in alternatives, things like macro hedge funds, given we're in a very macro volatile period. Some very stable, selective private credit is an interesting play. We're starting to see even private equity in the secondaries where you're seeing value. Infrastructure is a long-term income solution we really, really like. And then the commodities in gold. So I think there is a way of building that stability, but it's not just the traditional 60-40. It's adding in some resilience in other spaces.
And you mentioned about the equity portion of it. It seems like, is it time to kind of rotate out of the U.S. into other parts of this equity market now?
Well, Yvonne, I think over the last few years, big overweight in US has been very good. It is what a lot of clients have done. But now there's a huge concentration in the US equities of investors. And we know within the US equities itself, that concentration is growing to a few names. There is definitely a risk there. And we think if there are other growth catalysts out there, it's worth considering. And we do feel places like Japan and India in particular are very high conviction. And then on a tactical basis, we think China today still remains very attractive for the more nimble investor. So it's not about going underweight US, but getting a bit more to a neutral position from a long-term overweight that people have built up. And moving that cash out of the US towards other growth areas, I think makes a lot of sense going into a political end of the year.
Okay, Gareth, stay with us. We'll talk more about those two things you mentioned. You mentioned, of course, India. You mentioned China. Japan, maybe. We'll see if we have time, of course. Gareth Nicholson will be rejoining us in a couple of minutes. Speaking of Japan, we haven't done this in a while. Sherry An, our Asia trade co-anchor, is with us right now out of Tokyo. We haven't talked in a while, Sherry, have we?
It's great to see you guys. I'm back in the region, and what a time to be back here in Japan, where there's so much focus on the BOJ, not to mention the yen, and of course that enthusiasm over Japanese assets, something that we're feeling here at the S&P Dow Jones Indices Japan ETF conference. We'll be speaking to the Cboe global president when it comes to some of those macro trends that we're seeing in the region, where to invest and what global investors are watching. David Howson will be joining us, one of the largest options exchange operators in the U.S. and Europe. We're also talking geopolitics. We have the U.S. ambassador to Japan, Rahm Emanuel. Of course, we're just off the back of the Shangri-La dialogue, where we saw those tensions really play out between China, the U.S., and the Philippines. Plenty more to come on the China Show. This is Bloomberg.
Right, welcome back. We're looking at futures going into the India Open this Tuesday, and just to remind how epic Monday was. $180 billion of market cap added by that rally yesterday. The best day for Indian equities in about 3 years. So infrastructure leading those gains. 5.5% move simply in a Monday session. And looking at futures and some of these ETFs trading across the region at this point in time, it's looking like this rally is set to continue in day two. There we go. Nifty futures up 0.4%. Of 1%.
Yep, official vote counting will begin in just a few hours in India after exit polls signaled a third-term victory for Prime Minister Narendra Modi. Let's get to our Bloomberg Markets Asia anchor, Haslinda Aman, joining us live from New Delhi still. And Has, just tell us more about what's expected today.
Well, Yvonne, it is a big day for India, potentially historic if Modi wins a third term, allowing him to rule another 5 years. Of course, 10 years in the bag already. What's at stake? 543 seats. Now, they won a simple majority of 272, but exit polls already suggesting that Modi, as well as his BJP and allies, will probably get about 350 seats. So that is a comfortable, if not a landslide lead. Now, some of the states they're keeping a watch on include Gujarat, which is Modi's home state, 26 seats at stake. And at the last election back in 2019, they secured, by that, I mean the BJP secured all 26 seats. We also are looking out for Uttar Pradesh. This is the most populous state in India. 80 seats up for grabs at the last election back in 2019. BJP secured 62. Now, it is important that you win Uttar Pradesh if you want to win the election. Also, another state to look out for, Tamil Nadu, which traditionally has voted for the opposition. Of course, it is pretty much multi-ethnic, multi-religion. So Tamil Nadu, along with the other states in the south of India, have pushed back on Modi's pretty much Hindu nationalist narratives. And one other state to look out for, Maharashtra. Well, we have the traditional alliances falling through, so it is up for grabs. Let's see who wins Maharashtra. So we have Modi already declaring a win for him and the BJP on the back of those exit polls. Of course, we took a tour. We did a trip to the BJP headquarters to see what's been happening there. Celebrations pretty much being planned, and we are expecting Modi to make a trip there to give an address at about 6:30 p.m. later today.
Yeah, and as you mentioned, it's not so much a win, but how big the win is probably going to be like. And, you know, Modi is looking for a super majority. What's worked in his favor, and why do we think that's actually a possibility, a super majority?
Well, that's right. A supermajority. We're talking about 400 out of the 543 seats, Dave. Ambitious? Yes. But Modi says he does have a plan. Remember, this is a country under Modi's government. It's It's grown at about 8%, the fastest growth that we've seen among G20 nations. But it wants India to be a middle-income nation by 2047. That means growing at about 9% for the next 20 years. And Modi says, you know what? His infrastructure planning plan over the next 2 years, amounting to more than $500 billion, will take India to 9%. But remember, we have income disparity, income inequality at the widest in about 12 years. Modi has to ensure that wealth is being shared among his people. Another challenge, unemployment. We have unemployment at 8 to 10%, and 80% of those among the young. So yet another problem in the way of Modi.
Thank you. Bloomberg Markets Asia anchor Haslina Ahmed in New Delhi. She'll bring you the latest in the next hour as well as we get closer to that vote counting. Still with us is Gareth Nicholson, CIO and head of discretionary portfolio management at Nomura. And Gareth, we talked about how India is one of your favorite markets here right now. We've seen 2 months of outflows out of this equity market of late, just given the volatility around this election. Now that we're seeing maybe it's going to be a projected landslide victory for Modi, is that likely going to correct? Will foreign demand come back into this market?
Yvonne, we love this space, to be honest. It really is a great opportunity. There is so many factors that are supporting the India long-term story. And what you saw, as you said, you saw outflows coming out of India, largely from foreigners. But that was largely also filled in by local buying, India buying India. And that is a real stability point, a real kind of a big tick for international investors, which say, OK, during uncertainty, does the local market prop itself up, hold itself up pretty strong? And it was a clear yes. We do think that this is what big international investors who want to move some money to emerging markets to diversify out of their big concentration in US and Europe. This is some great story. A stable government, a very popular government, a huge growth opportunity, 8-9% for the next 20 years. That's phenomenal numbers. And you travel to India, you can feel the energy. There's so many people going back to India because of the energy. This is a space that we have been long for a while, and we continue to believe buying the dips is an interesting opportunity. It's also a space that is not as transparent as, for instance, the US when it comes to the stock market, the top 50. There is a lot of opportunities below that. So it's a lot of opportunity for active management and finding the value. So India definitely remains one of a high conviction place to deploy some of the concentration in maybe US and Europe that's built up over the last 5-10 years and start diversifying that out for global players. And that's really going to help move the market to the next stage.
Well, take us down that market cap scale then. So it's largely been for foreign money. It's largely been an IT play, maybe infrastructure, maybe less so consumption. So within that 50 stocks, for example, I know you can't talk specifics, but give us a clue of what perhaps might be chapter 2 to this rally.
Well, I think in the space at the moment, we're going to go for the biggest names because, as you highlighted, the locals, the Indian investing in India is quite diverse. When it comes to foreigners, they're going to go for the biggest, most stable names to start off with. That's typically how the big pension funds and asset managers, when they start deploying into a new region. So it's going to be the largest companies within the space that are going to benefit initially, and then it's going to start diversifying out. So you're going to see asset managers that have been in India for a long time. They're going to say, OK, we understand where the money is going to go, but we also understand the other opportunities. So that's where it gets interesting to look at some of the other sectors around manufacturing, around the industry, around the financials as well, which we think is going to be an interesting play within India. But it really is just following the flow of money, the new increments out of China, potentially out of the US. There's a lot of opportunities for amounts to go into India, which is still a relatively small market globally.
Yeah, tell us a bit more about that money flow from China to India. Is that still something that's quite pronounced right now after the rally that we've seen in China?
Well, I think the rally in China has been off a very low base. We know that the fundamentals still remain in question. I think it's been very tactical in nature. You've seen some pullbacks, but it's been a great rally, and we still like China from a tactical perspective. But we haven't seen that shift in the economic fundamentals just yet. That's going to be when we will start seeing long-term investors go back to China and buy and hold for long periods. At the moment, the money is very fluid. good within China. So for larger, tankers of investors, which take a longer time to turn around, they're likely looking for an EM asset class with a bit more stability at the moment with regards to the stock market, a bit more clarity around where the growth profile is going to come from and how they're going to do that. Whilst there's been a lot of effort in China to kind of focus on growth, it's not as clear as what we're seeing in India today. So there is going to be some long-term investors that are going to be shifting their long-term asset allocation to China, to more India, and are going to keep their tactical asset allocation to China whilst the momentum remains. So very active in the EM space with money moving in and out of India and China, but we do feel stickier money will remain in India at the moment.
There we go. That's the verdict over the shorter term, maybe the longer term. Gareth Nicholson, their CIO, head of discretionary portfolio management there at Nomura. Going into the open today, just under 8 minutes away. And a reminder, of course, India relative to China. India's trading at twice. So India's trading at 20, China's trading at 10. Still India, according to Gareth there. Right, plenty more ahead. Futures are pointing down ahead of the Tuesday open. This is the China Show. Okay, we're looking at some weakness in the early goings of Tuesday here, 0.7%. So it's looking like tech will be on offer more than most at this point in time, though. 18.4. So we did get a big pop in tech, of course, yesterday, so maybe some profit taking. Broadly speaking, there is not a lot of risk appetite out there going into the Tuesday session, with just certainly with this move in bonds is certainly more pronounced than we are seeing in equity markets.
Yes. In terms of analyst actions today, Morgan Stanley had an interesting downgrade when it comes to these Chinese airlines. They're talking Air China, China Southern, and China Eastern, all of which were cut to underweight. These are the air shares that we're talking about. But that price target basically set at 605 renminbi for Air China. That implies a 19% decrease from current levels here right now. So that's quite a sizable cut there.
Going into that. So we're looking at that really among, by the way, it's extremely quiet across these markets today. So we're looking at some of these stocks going into the open. We're looking at some of the oil plays because of the big drop in oil. MMG, that's a stock that's resuming, that's traded in Hong Kong. It's an Aussie headquartered stock. We're down, we're poised for the biggest drop since about December 2022. Cash call here out of the company, 9 billion, I think, Hong Kong dollars was the share sale that is set to do. So, yep, there we go. We're resuming trade today. And, of course, we're looking at oil, as we pointed out earlier.
Yep. So oil, obviously, that drop in oil, which took a day kind of to react to this OPEC Plus deal. And that we're certainly seeing that in some of these Chinese oil suppliers and the like here. Shenhua Energies slightly down, but CNOOC, that's what you're seeing, about close to 3% losses here at the get-go. We got the open coming up next. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down the open of markets in Greater China here. It looks like they are set to join the fray here. What we're seeing across Asia, with stocks are down, bonds are bid up here this morning, and the dollar is stalling on the back of some slower prints in terms of the U.S. data that we got overnight as well. Hang Seng pre-market, we're down about 0.4%, and that dollar stall, I guess, that weakness that we've seen, that's leading to a bit of stabilization in the currency. 7.25 this morning, Dave.
Before we know it, we're probably going to be talking about July as possibly a window for the Fed to cut. I think it was Stanchart that came out with that note that markets might be underpricing the possibility that the Fed moves in July. I guarantee you that narrative's going to change, though. A few seconds to the opening bell. We did get a fix early on. Nothing much to talk about as far as that's concerned here. We're flat across these markets. Some technicals are in play short term. When I say short term, 48-hour window or so. When you look specifically at this, at the benchmark and the rally into the close. I'll get you the chart in just a moment here. What else are we tracking here? Shanghai crude. There we go. That's your big story in China today. That's really a global story on the back of, as Yvonne is pointing out, OPEC Plus. It did take a day for markets to then eventually digest that. October might be, of course, that time that we might get more supply hitting this market, if not slightly before that. In fact, we're looking at some of these plays. Energy index, bottom of your screen, is 1.4%. Flip the page. Have a look at Hong Kong. Within this market, of course, we're looking at a couple of things. We're looking at this big tech rally that took place yesterday, a pullback maybe as far as that is concerned today. In the early goings, though, we're not really seeing a lot. Tencent is still holding fort. as we speak there. 13 straight days, in case you're curious, in terms of net inflows into Hong Kong from mainland China across the Stock Connect. So far, there has been, and by the way, that has been fairly consistent. Net buying across the Stock Connect, if you go all the way back to Feb, with the exception of a couple of days. As promised, here's your chart for you on the CSI 300. So 3,600 for now. We're below that. It's now the next line in the sand, which is your 50-day moving average, is the green. Reason that's important for now, and it's very, very short term, is that we traded below that for a couple of hours in the session yesterday. A rally into the close actually meant that we closed above that level yesterday, and we are opening above that level here today. So we'll see if that support level holds here on this specific benchmark. Okay, a couple of stocks that we're tracking here. MMG, cash call there, 9 billion Hong Kong dollars. Rights issue, that stock is resuming trade today. That's declining about 10%. Poly Real Estate, also cash call. Different part of the capital structure, though. That's a convertible bond. In the order, I think it's coming up bottom here, in the order of about $1 billion, if I'm not mistaken there. And of course, we talked about this earlier, Morgan Stanley out with a changes to their calls on Chinese airlines here, underweight on these two you see on your screens. Oil producers, for obvious reasons, we talked about this drop in oil, 4% down, and your big names, unexpectedly so there. There we go, Yvonne. We're looking at declines just about across the board.
Yeah, for more, let's bring in our oil market reporter, Sharon Cho, with the latest. Sharon, it's interesting how it took a whole day for the markets to really react to this, but what do you think was the key part of the deal that led to this slump in oil?
Yes, that's right. I think, there are several parts of the deal. The first part is the extensive voluntary cuts for key members like Saudi Arabia and Russia that will go well into 2025. And I think this is the important part. They agreed that they will phase out some of those cuts that they agreed in starting in October, which was a surprise to a lot of people and is earlier than what some of the people had been expecting. So, under the new agreement, 8 nations will be taking part in additional cuts that will have added about 750,000 barrels a day to the global market by January of next year. So, for example, the UAE was given 300,000 barrels a day increase to its production target for 2025. So, this agreement is in place to keep shoring up oil prices and also ease some of the restraints for key members like the UAE. But if we look at the production data for OPEC last month, we see that the production was pretty steady month on month with key members like Iraq and the UAE, pumping above their agreed assigned quotas. So we could see some still haven't fully implemented their supply curves even before the deal was, agreed on.
Yeah. So Sharon, then, so as we look at oil. And you mentioned the incremental information was the October sort of timeline of when we might get more supply. So do we look at lower oil prices then going into that? What have analysts been saying about this?
Yes, I think, we need to keep in mind that a lot of the traders and investors, analysts looking at the market is saying that the market is pretty much still oversupplied. It's very much well supplied. And the demand that we're seeing in China right now, it looks pretty weak. We're not seeing like the massive imports of crude imports that we have been seeing over the past, year or so. So the Goldman Sachs analysts think that the meeting was bearish, and that because of the recent surprise to global crude inventories, they think the risk to $75 to $90 range for Brent is skewed to the downside. But we do have banks like Morgan Stanley and RBC saying that, OPEC is still in control of the market, and that the decision from OPEC Plus to extend the voluntary cuts will tighten the balances until at least for the second half. So we'll see a tighter summer. But the unwinding of some of the cuts, they agreed that it was faster than expected.
Sharon Cho, thank you so much. Our oil market reporter in Singapore for us, just on the latest there on oil. And of course, just in case you're curious, iron ore also trading bottom of your screens there. All right, a quick glance at these markets. 5 minutes into the session here, we are trading effectively going nowhere. We're headed back to Tokyo, though, on the other side of this break. This is Bloomberg.
You're watching the China Show. Here are some of the big geopolitical stories that we're following for you this morning. Israeli Prime Minister Benjamin Netanyahu has repeated there will be no permanent ceasefire in the war against Hamas in Gaza until Israel's conditions are met. But he says Israel is willing to pause hostilities for the sake of hostages. President Biden last week proposed a three-phase peace plan, which included a temporary truce and eventual permanent ceasefire. South Korea, meanwhile, is moving to suspend a border agreement with North Korea after Pyongyang sent nearly 1,000 rubbish-filled balloons into the south. The 2018 agreement was aimed at reducing military tensions, but Pyongyang declared last year it was withdrawing. Seoul's decision will allow its troops to resume drills near the military demarcation line that divides the two Koreas.
Looks like we have a lot to talk about. On the geopolitical front, let's stick to that theme and regional security and head over to Tokyo, where the Asia Trade co-anchor Sherry An, of course, is standing by for us. She's live at the S&P Dow Jones Indices Japan ETF conference with her next guest. Sherry.
Yeah, David, Yvonne, you mentioned really those top geopolitical stories. But of course, we're also coming off the back of the Shangri-La dialogue, where we also saw those tensions between the U.S., China, and the Philippines play out. Joining me now is the U.S. Ambassador to Japan, Rahm Emanuel. Thank you so much for joining us today. I mean, so much on the agenda. I don't really know where to start. What's top of mind for you today?
Well, we're building off of a very successful putting in place the bricks and mortar of the lattice work strategic architecture the president laid out. Very successful trilat in Shangri-La. We have a very successful trilat aerial exercise. On the 6th of this month, there will be a Coast Guard exercise between the United States, Japan, and Korea. and there was a meeting back in Washington, Deputy Foreign Ministers trilat. So those are key components of the president's switch from kind of a hub and spoke to a lattice work security. Obviously, also working very extensively on the other trilateral track vis-a-vis Japan, the United States, in support and working with our colleague, the Philippines. So those are a couple things. There's economic components to what we're working on. There's a number of investments on both sides, bilateral. And then follow through from the state visit. We just had Admiral Paparo here, who's the head of the Indo-PACOM in Hawaii. Right. And we have a major kind of down payment on what the President and Prime Minister announced, both on the kind of what's called the command and control, a rethinking of our force structure here, with also a rethinking of our new exercises that we're going to be doing between the trilateral, but also on a bilateral basis.
And it's such an important component, right? Yeah, exactly. It's such an important component when you see the really rising tensions that we're experiencing all over the world, especially, as I mentioned, towards the South China Sea. You mentioned the cooperation with the Philippines. Is that the next place of potential crisis?
Doesn't have to be. I mean, that's number one. The Philippines is a treaty ally of the United States, and we'll stand by our word. The president could not be more clear about that. The second is, there's no country in the South China Sea that borders it that China does not have a conflict with, whether that's Vietnam on energy, Malaysia, Philippines. Now, what are the two insecurities of China? Food security, energy security. 14% of the worldwide fish catch is in the South China Sea, all the energy. And like the International Court ruled in 2016, Philippines is in the right here, and we're going to stand by our ally. It doesn't have to be. China has to respect their neighbors, has to respect the decision by an international court when they adjudicated this case. And it's very clear from a navigational standpoint, a maritime standpoint, a rule of law standpoint, the rights of the countries, and the United States is going to be clear about our commitments to our allies. That's one. Two, I would say, the United States, Japan, and the Philippines have, as three democracies, have a shared interest in the economic development and trade between each other. Gina Raimondo, the Secretary of Commerce, was, I think, just 6 weeks ago, led 50 CEOs there. And around that time, Prime Minister Kishida was the first Japanese Prime Minister to give a joint session speech to the Philippine Congress. And we're going to be committed to one of the big things that we announced at the trilateral at the White House was the Luzon Corridor economic development of the port, airport, roads for transportation, distribution, and logistics, that the Philippines can be a key economic driver.
And those alliances are so important for the U.S. here in the Asia-Pacific, but at the same time, we're seeing China become more and more vocal when it comes to its pushback against U.S. influence. We're even hearing about the Asia-Pacific NATO or that sort of rhetoric. How much sense does that make at this point?
China is not going to win the Good Neighbor Award. They have a problem with India. They have a problem with the Philippines. They have a problem. They're right now creating economic coercion against Japan on fish, even though they're still fishing in that area. They just look like they threw in the towel with Australia on their 3-year economic coercion. There's nobody in the neighborhood that China is not having some type of either economic or strategic challenge with. So none of it's been kinetic. The United States is a permanent Pacific power and presence. The countries from Japan to South Korea to Australia to Singapore to the Philippines, even Vietnam, want America's presence because they don't want an unmoored, untethered China that disregards their own sovereignty. Countries prefer their sovereignty versus being told what they can and can't have. That's exactly what it was adjudicated by the courts in 2016 when they ruled in favor of the Philippines economic zone.
We're seeing more bifurcation when it comes to these different groupings around the world, because it's not just China now standing alone. Even Brazil wants, with China, to make a different conference for Ukraine when it comes to its peace plan.
You know, you say that, but Brazil's just now taking China to the international system on their tariffs as it relates. So, you know, before you kind of blanketly, and I'm going to say in a broad stroke, what's interesting about what, you know, China's trying to embolden what is called the BRICS into something bigger. South Africa and Brazil, two very important countries, are having economic conflict because China's taking their domestic economic problems and exporting them to the world. And the world, from Europe, Brazil, South Africa, India, Japan, other countries, we're not having your problems by over-manufacturing at subsidized prices come into our markets. So China's got a problem because the rest of the world, from ally to not ally, is saying, hold on here.
North Korea, another potential conflict zone. And we're seeing these, trash-filled balloons now going over South Korea. South Korea sort of withdrawing from a deal back in 2018 to lessen military tensions there. How big of an issue is this for the U.S.?
Well, again, Korea is an ally of the United States. We have our security commitments and economic...
How easy an ally is South Korea to Washington?
How easy? What do you mean by
easy? Easy to work with.
Oh, well, it's very easy. I mean, I can give... Let me say this, going back to my own... when I was President Obama's chief of staff, worked with the Korean government as we negotiated an FTA on trade, and our economic integration is even strong. You look at what Samsung, some of the auto companies are investing. I'm not going to, that's for the U.S. ambassador to Korea to say, but they're a very, very economically important part of our economic statecraft. They're a very, very important part of our not domestic, but international national security, and we're going to stand by Korea. They're very clear as a sovereign nation of what their interests are, but that's true of any country you work with. But to say, the term I suppose you threw me off. I wouldn't use easy or hard. They're an ally, they're a friend, they have interests, and the most important thing isn't easy or hard. They trust us, we trust them, and when you have trust, you can get through a lot of stuff together.
We're headed towards the presidential elections in the U.S. How are you, as ambassador to Japan, setting up the region and diplomacy, foreign relations here for what might happen in November?
Well, look, I mean, everything that President Biden has put together a major fundamental shift in America's policy in the region, from a hub and spokes to a lattice-like work, both on the security side, the economic side, the diplomatic side. And I believe whether it's the trilab between the United States, Japan, and Korea, or the trilab between the United States, Japan, and the Philippines, or the Quad, these will stand the test of the time because they're in our interest. Look, nobody wants to see a kinetic conflict in the region. But I don't think it's breaking news that for the United States, this is an away game, and your allies play a really important role. And the idea that you're going to do something or be able to be an effective force for deterrence without allies, it fundamentally doesn't understand the region. That's different because this is a body of water versus Europe, which is land. So I would say to you is, even though there's an election sitting here today, neither one of us, quote unquote, know the outcome. The trilateral, just take the Korea track, Japan. Two things. In the last 3 or 4 days, there's been a numerous amount of trilateral activities on the military side, the political side, diplomatic side. One. Two, when Prime Minister Kishida returns from his state visit, his first foreign call to a head of state was to Korea. That went to happen 5 years ago. Three, the United States with our allies is stronger as we basically communicate not only at the level of deterrence, but a permanent Pacific power, because the multitude of countries standing with us from the region, when China looks at that, there's a reason China says we don't want the United States, because all of a sudden allies coming together, working together, whether that's the United States, Japan, and Korea, or whether that's the recent Australia, Japan, Korea. So I think that will stand the test of time because it's in America's self-interest. And anybody that doesn't understand that does not understand America's self-interest.
Great to have you with us, Ambassador. Rahm Emanuel, U.S. Ambassador to Japan, here with us talking about all things geopolitics and, of course, setting up for the presidential elections in November as well, Yvonne.
Great stuff, Sherry. Of course, we'll have more from Sherry at the S&P DJI Japan ETF conference in the next hour. We're going to speak with the Cboe Global Markets President about the firm's growth outlook. David Howson joining us in just the next hour. Plenty more ahead. This is Bloomberg.
Welcome back. You're watching The China Show. Some big corporate stories that we're tracking at this point. Bloomberg has learned that Chevron has halted LNG production at part of its key LNG export facility in Australia. The Gorgon plant had only resumed full output last Friday following maintenance during the most of May. Now, the potential shutdown, or production shutdown to be more specific, comes with European gas supplies at risk after an outage, of course, at a processing plant in Norway. Sent prices, of course, there yesterday skyrocketed. Right. Hedge fund firm Diamond Capital Asia is expanding its Hong Kong central business district office, perhaps here, as the city sees record premium office vacancies and declining rental rates. Diamond has signed a lease for a 650 square meter office in the landmark commercial complex that's owned, of course, by Hong Kong Land Holdings. Now, the space can seat more than 70 employees, double what its current office can accommodate. Now, activist investor Bill Ackman's wealth has hit $8 billion after a group of investors put $1 billion into his hedge fund for a 10% stake. Now, the valuation makes Pershing Square one of the most highly valued hedge funds in the Bloomberg Index, in Bloomberg indices at least. It's also the first time Ackman has appeared in Bloomberg's ranking of the world's 500 wealthiest individuals. U.S. private equity giant KKR is considering entering the private credit market in Japan. The company says it wants to provide an alternative to bank loans since most direct lending efforts for Japanese companies have been done overseas. In addition to private credit, Japan is also the destination for about 40% of KKR's investment in the Asia Pacific.
All right, checking markets now. We were talking about that Morgan Stanley note when it comes to that downgrade on some of these Chinese airlines, and you're seeing not a huge reaction in the stock, but we're getting a little bit more context behind that report. Really what Morgan Stanley is saying, they're anticipating continued softness in their earnings in the second quarter. There's been sluggish demand and fierce pricing competition here right now. So we talked about the slashing of these price targets is about double digits, about 15% or so for China Eastern. Air China shares lower by 25% to 605 renminbi. So certainly, the market not reacting to that, but certainly they're looking at the outlook here. It's not looking still pretty soft.
Speaking of outlook here, we'll pivot now to Great Wall. So report yesterday, and the company certainly then came out with a statement late on Monday to talk about this. The Great Wall was down as much as 9.4. We're now down to 7% here. So the company's story here, it's closing its office and its headquarters in Europe and laying off about 100 of its staff there. The timeline for that will be in August. It's certainly one of the largest auto manufacturers, of course, independent ones, at least in China here, adjusting to its European strategy there. Certainly the operating environment it takes us straight into geopolitics that, again, becomes a little bit more difficult. And, of course, we have the shareholders meeting at TSMC.
Yeah, we're seeing some lines crossing when it comes to the CEO, talking about reiterating healthy growth year expected for 2024. The chairman, Mark Liu, has been speaking the last few minutes or so. We do not want to buy back stock, is what they're saying. They have high capex. Their stock price is not that high, even though I think we're close to records or we're at records. Yeah. And they said, but cash dividend is better for shareholders. And now he's talking a little bit more about, obviously, energy efficiency, of course, as they get into this whole AI sort of revolution. They're saying TSMC using about 8% of Taiwan power right now, but they expect to use about 10 to 12% of Taiwan power by 2030.
The broader read across these markets is we're slightly higher now in Hong Kong. We're now 18.4 right now, half of 1% to the upside. So tech, which was lower in the early goings, is now higher. Tencent was holding forward at about the open here. And the story here, which probably is at the bottom row, second to the right, is this big drop. We're seeing this catch down we're seeing in crude prices globally. Of course, this drop in gold. Right, coming up next hour, some good conversations coming up on your screen. Stay tuned for those. This is Bloomberg.
Welcome back to the China Show. Here's a look at the CSI 300 just a half hour into the session here. And basically, we've seen a bit of a reversal into some of the weakness of late here. And there you go. We're seeing now a slight rally, about a fifth of 1% on your onshore market. And it is sort of bucking the trend, given that we have seen some weakness across equity markets here in the region, whether it's the data that we got out of the U.S. The dollar seems to have stalled a bit here as well. Then bonds are still continuing to bid up here in the Asia session, Dave.
Yeah, and this tussle between... It's quite timely now. We're talking about how China is sort of providing some comfort right now on the back of India also outperforming today. So this conversation we had earlier with Nomura, India's trading at twice the price of China. It's still India, in their view, where they're seeing most, where they expect most of the long-only funds to pile in this year. Other things happening right now. So we're looking at the currency markets, the weakness in the U.S. dollar, as one is pointing out, and that's showing up, at least for one. Dollar yen is now back below 157. We now have a 109 print on the euro that takes us back to that pair, going all the way back to, I think, late March. Rate decision, of course, is in 60 odd hours or so. Rate cut is expected there. So watch that very closely. Brent prices, bottom of your screens. Brent crude is half of 1% to the downside. We've now also taken out $78. Shanghai crude is playing some massive catch down there. 4% lower on Brent prices, and Shanghai crude down 4.4%. And that takes us into the data that is on the softer side of things in the U.S.
Right. So it was the ISM data that we got out of the U.S. You had the Atlanta GDP numbers. We got the JOLTS numbers coming through later on as well. So certainly, it's a few prints now where we have seen slower sort of demand or slower economy, or pointing to that in the U.S. economy here right now. So the ISM PMI back in contraction there, basically missing nearly all the forecasts as well. And the markets did react to that, right? Just given we saw, the big drop in yields overnight. And really, what does this mean for the labor market? Obviously, we have the JOLTS, and then we got actually the NFP, the non-farm payrolls, to wrap up the week on Friday. So we have a few more prints out there. And it's interesting enough, even after this data, you're starting to see more of those rate cuts being priced in to as maybe September now, I believe, is where the pricing is looking at here. For more, let's bring in our MLS strategist, Mary Nicola. And Mary, it seems like before this was a relentless rally in U.S. stocks, and nothing was going to bring it down. But now you're starting to see maybe even some bad prints, and the fundamental side of things being questioned here. Is bad news finally bad news for this market?
Yeah, I think it's also a combination of the fact that there is some bad news in terms of softening with the economy, but also it's the fact that prices are holding up. So if you look on the ISM component, for example, and the prices paid, it's still relatively high. It's slowed down a bit, but it still remains high. So it does bring to question of the fact of, do you start getting stagflationary concerns where the economy is starting to soften, but prices are holding up? And that's really a bad mix for stocks now and going forward.
Yeah, so Mary, the one part of this U.S. equity market that's held up, and we have news this week out of Computex in Taiwan, where we're getting updates from your big ones, AMD, Nvidia. You had a 5% pop in Nvidia yesterday. Do you think markets can assume that group of stocks just keeps going up until we're told otherwise?
Yeah, there's a lot behind this rally in terms of fundamentals. So they do still have that fundamental support, but and of course you have the decline in yields adding to that. So that is also another very strong tailwind for a lot of the tech stocks. But it's really going to be about can that rally in yields hold up? That helps support the tech sector. And for now, especially when you're seeing softer data, it is helping. But again, if you start seeing that inflation showing its resilience, that's when it starts to stutter and calls into question not only equity stocks, but broader tech stocks as well.
And of course, we're still tracking this India election official counting. That starts in just about this hour.
Yeah.
Mary, how should we be positioned right now? I mean, obviously, we're still talking about records that have been hit in this India stock market. What's the best way to look at this and what to expect today?
Yeah, there's a great deal of resilience in the India equity market. Obviously, they've delivered on earnings growth. They've delivered on growth, economic growth as well. So it has a few tailwinds behind it that could keep that resilience going. The key thing here is just about what happens in terms of the formation of the government. If you get, let's say, a supermajority, what happens if the government then focuses more on its political agenda rather than the economic agenda? And that's absolutely crucial and could actually put a little bit of a stop into the rally in Indian equities if we see that. But for now, there is that resilience that is going to keep supporting it in terms of just how much it is being differentiated, for example, from China in terms of whether it's on the growth side or on the earnings side, and that's going to help things go. But again, if we see that supermajority take through and the political agenda becomes more important, that's when we can start seeing them falter a little bit.
Mary Nicola, there are MLive strategists in Singapore for us. As Mary was just pointing out there, this rally is set to continue this Tuesday. Futures are pointing higher again ahead of the open, 90 minutes away. Now, official voting, as Yvonne is pointing out, is set to begin in about 25 minutes or so now, if these schedules are, if they come in on time, effectively. Exit polls, we were talking about this signaled a third-term victory for Prime Minister Narendra Modi. Markets are already cheering. Let's bring in Haslinda Amin, our Bloomberg Markets Asia anchor, of course, to talk us through this. She's live for us in Delhi. Tell us more about what is expected today. What are you guys busy with there?
Well, for a start, we're counting down to that start of the counting happening in less than 30 minutes. Of course, you talked about this exit poll suggesting perhaps Modi and his alliance will get 350 seats of the 543 seats at stake. Of course, it remains to be seen. These are just exit polls. What we know so far is that apart from Modi himself, there are other personalities we're looking out for. Amit Shah, for one. This is the man who's considered as Modi's possible successor. Of course, Modi himself has not talked about succession plans, but he is keenly seen as a possible successor. He's one to watch. The other one to watch is Rahul Gandhi. Now, remember, his grandfather, Nehru, as well as his grandmother, Indira Gandhi, were former prime ministers. So these are some of the personalities that we're looking out for. In terms of states, we're keeping an eye on Gujarat state. This is Modi's home state. We have 26 seats up for grabs. And at the last election back in 2019, the BJP, the ruling party, garnered all 26. Uttar Pradesh, the most populous state with 80 seats at stake. If you want to win the election, you got to win Uttar Pradesh, and BJP garnered about 62. Another one we're watching out for is Maharashtra. Remember, the traditional alliance fell through, and it is up for grabs. Anybody's guess where Maharashtra will go. And of course, the southern states, the likes of Tamil Nadu, traditionally they've voted opposition. This time round, well, they're hoping that perhaps Modi will make inroads, but it's going to be a tough one. We have states which are pretty much multi-ethnic, multi-religion, so they've been pushing back on Modi's pretty much Hindu nationalist rhetoric. You talked about Modi wanting a supermajority. He's looking for 400 seats out of 543. It is very ambitious. He says he has a plan, but let's see what happens when the vote ends in a couple of hours.
Yeah, there really is that geographical split, as you mentioned, which is really have been the center of this election. You mentioned about that supermajority. What's really worked in Modi's favor so far?
Well, Modi himself. Modi is a cult figure. Modi is the most popular leader that India has seen. And even at 72 years old, Yvonne, he crisscrossed the country during campaigning, and he spoke to big crowds of people explaining the vision he has for the country. And Modi says he has a plan to get India to middle income status by 2047. Again, it is ambitious, but he says, you know what, his spending plan when it comes to infrastructure building. He wants to build more roads, more airports. In the last 10 years, he's built more than 80 airports already, and he's built 160,000 kilometers of roads and highways. He says he will do more, and these plans will take India to 9% growth. Of course, we talk about income inequality. He's got to address that. We talk about jobs creation. The likes of India's Technology Institute already lamenting that they've not been able to place their students, engineers, in the last 12 months or so. That is a problem, job creation. So these are the things Modi will have to address if he gets back to power in the next 5 years.
Yeah, and had just a final word on, the opposition. What opposition? Really, after this, certainly licking their wounds, if you will. Where do we go with that conversation these next few years, Has?
Well, you're right. What opposition, right? But the opposition has really pushed back on Modi's supermajority. They say they will garner 292 seats, means they will have the majority to form the government. But so far, it's been really quite a struggle. Until this election, Dave, the opposition was nowhere to be found. They've been dwindling. And the one leading the opposition is actually the Congress Party. And it has been saddled with corruption scandals. People say it's been lacking in terms of visionary policies. So it's going to be a tough one. Let's wait and see how it does at this election.
Thank you. Tiananmen there, Bloomberg Markets Asia anchor, joining us from New Delhi. Of course, she's going to have more on her hour next when we get those vote counts and maybe some results, initial results coming through from this India election. You can also turn to your Bloomberg for more on this. Go to TLive Go and get commentary analysis from our team of expert editors.
Just ahead here, we're back in Tokyo at the S&P DJI. Okay, that's a mouthful. It's 3 letters, but it's difficult, among many things. Japan ETF conference. That's another difficult 3-letter thing to say. Conference in Tokyo, and we'll be hearing from David Howson, of course, the global markets president at Cboe Global Markets, coming through there. Of course, conversation with Sherry. That's and more here on shows. This is Bloomberg.
Well, let's head back to Tokyo, where our very own Sherry is at the S&P Dow Jones Indices Japan ETF conference in Tokyo, and she's standing by with our next guest. Sherry.
Yeah, guys, tons to discuss here at the conference. Of course, we are seeing the growth of the global ETF market, but also how investors need to diversify their portfolios as we continue to see more uncertainty around the world. David Howson, Global President at Cboe Global Markets, joins me now here at the conference. Thank you so much for joining me here in Tokyo.
Thank you for having me.
So let's talk a little bit about all of that uncertainty and global risk that investors are factoring in. When it comes to your business in the options market, what are you seeing?
The options markets are incredible at giving us insight into what investors think about the forward expectation of prices and the forward expectation of volatility. What's been really interesting this year in particular, given all of that macro uncertainty which we're facing, is that actually, as we measure volatilities across asset classes, they've been tremendously subdued on a 1-year and even a 10-year basis. So whether you look at equities, FX, commodities or rates, been extremely sanguine, really low levels of volatility. The
odd spike coming into Q2 in April as equity and bond volatilities spiked there a little bit. And then when we think about elections, 40% of the world's population going to the polls this year, we look at the VIX term structure, which is a 30-day expectation of volatility in the S&P 500 complex. And we see a little kink in the term structure around the election. So we see that expectation of volatility around the election. But interestingly, it comes back down again straight after. So overall, at a macro level, volatility levels and uncertainty are pricing in, not too much distress. However, though, when you think about dispersion, that's another index that we've got. We could talk about the movement underneath the surface is also really interesting.
Yeah, I mean, when we're talking about the Mexico elections, the India elections today, not to mention, of course, the U.S. presidential elections also coming up. When you're structuring all of that on an options-based ETF, as is the theme today, what do you focus on?
When we think about the options-based ETFs, and these have really come into their own since the pandemic, it's a six-fold increase in AUM in options-based ETFs, now totaling around about $140 billion under management. And the great thing when we talk about options, we always talk about their ability to manage volatility in portfolios, the ability to hedge and manage risk, the ability to generate income. And those strategies are now being wrapped up into a transparent, standardized wrapper which can be traded on exchange. And it was a big talk at the conference earlier on when we heard it was one of the key themes, those options-based ETFs broadening out, and actually the interest and appeal coming right here to Japan as well.
David? Hi, this is David. I wanted to pick up on what you just mentioned.
Hi,
because
David.
There has been, and I know you guys flagged this in your earnings call, I think about 3 weeks back, the pickup in retail trading around options, for example, whether that's single stock, for example, or otherwise. Do you expect that to continue? And perhaps more importantly, why do you think that's been the case? Why has there been such a massive pickup in interest from retail investors around really what should be, perhaps still are, fairly complex securities?
Yeah, it's been tremendous to watch the evolution of the last 4 years. The pandemic happened, people went home, they got stimulus checks, and they became engaged in the financial markets. We first saw retail investors grow in their interest in equity trading, and then from there moved to single stock options trading, where we saw a lot of upside call buying. And then in 2022 and 23, that broadened out to ETF and index options trading, where broad-based exposure was the more a better utility, a better tool for retail investors. And we really think it was catalyzed not just by the stimulus checks, the time at home, but by the education in the industry, and actually more importantly the broad theme of technology. Technology in the hands of retail investors, the democratized access to news, to data, to analytics, and the ability to trade seamlessly quite sophisticated strategies. And certainly the industry at large, Cboe included, is really focused on educating those end retail investors to be sustainable investors, because a sustainable investor is certainly a better and more balanced one for the marketplace.
I guess there's a clear example of this retail frenzy that we're seeing, David, which is basically GameStop, which has basically come back in a big way. I'm just wondering, how are you looking, or what have you been seeing recently when it comes to meme stocks now from the Cboe sort of perspective? And do you think the options market is better prepared for it this time around?
And certainly, the meme stock activity seems to be very much somewhat back in vogue right now. Not quite to the levels we saw previously in a general case, but also the options market providing a great opportunity there also to manage exposure to single names as well as on a broad-based view. We certainly see a tremendous amount of dispersion underneath the surface there in terms of a variety of sector and stock rotation that also retail are finding themselves very engaged in.
Talking about really handling when it comes to all of this frenzy when it comes around retail investing as well. We have seen those exchanges and the technical glitches in the past few days. What's going on?
the key thing about technical outages and glitches, they will happen from time to time. The key thing is how the markets and the industry handles them and responds to them to make sure that investors receive clear information about what's going on, when a resolution's coming, and how investors should interact with the marketplace. Haven't got the full details on the aspects from yesterday or from the US marketplace in particular. The US market is a tremendously resilient marketplace where you can trade the same stock across multiple exchanges, so price formation can certainly continue provided there's a good source of original primary price.
You've been growing exponentially in the past few years. You acquired, 9 companies in the span of 3 years. Tell us how you're really devising your strategy around global expansion, and if you're planning to do this more organically or through acquisitions as you've been doing in the past.
Yeah, certainly those 9 acquisitions in the last 3 years has been a big part of Cboe's focus, and now we're really pivoting much more to an organic-based strategy. We need to focus on completing the integration of those companies. We need to think about our global growth from there. The secular trends of globalization, of markets being increasingly interconnected, has led us to organize ourselves along the same lines as our customers along global lines, and has now put us in 7 of the world's top 10 economies, including the Japan marketplace right here.
All right, David Howson, great to have you with us of Cboe Global Markets. David, sending it back to you. We're here at the S&P Dow Jones Indices Conference in Tokyo.
Yeah, and of course, just for our Bloomberg clients, here's the plug. If you missed some of the interviews there on the ground with Sherry, you can catch up on all that really nice content. TV Go on your terminals there. Join the conversation too, if you will, if you could. Send us IBs, instant messages to our team and our guests. And if you have any burning questions you want to pose to our guests coming through, just send them our way. And you know what? We'll decide if we ask those questions, really. Check it out, TV Go. This is Bloomberg. Here are some stories that we're following. Right now, activist investor Bill Ackman's wealth has hit $8 billion after a group of investors put $1 billion into his hedge fund for a 10% stake. So the valuation makes Pershing Square one of the most highly valued hedge funds in the Bloomberg Index here, in our Bloomberg indices at least. It's also the first time Ackman has appeared in Bloomberg's ranking of the world's 500 wealthiest individuals. Now, U.S. private equity giant KKR is considering entering the private credit market in Japan. The company says it wants to provide an alternative to bank loans since most of the direct lending efforts for Japanese companies have been done overseas. In addition to private credit, Japan is also the destination for about 40%, that's 40, of KKR's investment in the Asia Pacific. Okay, and the smallest chance you missed this news overnight, GameStop shares surged after the Reddit account that drove the meme stock mania of 2021 posted what appeared to be a $160 million position. Not clear, though, what went into that specific position there in the video game retailer. Screenshot posted by Keith Gill, of course, from that. And, of course, the movie, if you caught that, fantastic movie, too, showed a stake of 5 million shares. A position that large would actually make him one of the company's 5 biggest investors. Yeah, so we closed lower at 21% off the peak of the day.
Yeah, and it's interesting, right? We have the Journal reporting now that the SEC is looking very closely at this sort of frenzy that's come up from this whole GameStop, meme stock thing that's coming through. And they are looking into this here right now. And it's interestingly enough, you take a look at investors, the ones that actually have shorted the stock, they're not really backing out this time as well. I mean, Andrew Left is saying that he's reshorted GameStop here. They also covered their short back in May as well. So, you know, there's still going to be this kind of push and pull around this whole frenzy when it comes to GameStop. He says, look, it's not like I have anything against the company, according to Andrew Left. He says, look, I just think it's a really good trading vehicle right now. Yeah, in fact, we have more than a couple of stories that takes you through really the ins and outs of the story, the actual thing that happened, all these angles and shorts really sticking to their guns here. I have a feeling, and I suspect we're just getting started here yet again. And we'll see what the SEC says, right? It brings to mind other things, of course, when you make things. And it wasn't clear, too, and, you know, we were discussing this behind the curtains yesterday. As we, of course, saw that post in the tweet,
what really went into that position, whether it was simple longs and what portion was options. Anyway, it's getting complicated.
It doesn't matter, according to these people, that following that he still has. And this, of course, renewed interest into meme stocks here once again. Markets are doing this here right now, still seeing a bit of a back foot here when it comes to equities. U.S. futures are flat. Dollar is still a bit on the back foot here as well. Yeah, not a whole lot of news to really tell you about here today that's really driving these markets. Plenty more ahead. This is Bloomberg. All right. Yeah, there's not really anything in terms of positive catalysts to really talk to you about here today. We talked about how, we're pretty slow going. We're still waiting for some key data out of the U.S. But after we saw the ISM, that certainly didn't bode well for risk assets overall. But you're seeing also what's been going on and what's driving some of these sector moves here. Energy certainly is a big play there. We're seeing that big drop across Asia. Some of these, obviously concerns about what OPEC Plus is going to do once they start winding back those production cuts starting in October of this year. Is that really bearish for the market, or can really OPEC Plus still monitor and, I guess, try to control this market in some way? And of course, we're still waiting for any minute now initial sort of vote counting in India. Yeah, the actual counting, although if you ask markets, they've decided. They have really run with some of the exit polls that suggested, of course, a third term there. And when you get a move in a market as big as India's is already, I think it's the top 4 or 5 now. Hong Kong's overtaken it again. Yeah. 200 billion was the rally yesterday that added to the best day in about 3 years or so. And futures are actually pointing to the fact that we are probably going to get a day 2. Not to the extent of yesterday, but yeah, we are bracing to see really. And as Haz was pointing out earlier on, of course, our co-anchor who's on the ground there in Delhi, do we get 400 on that seat? Of course, a super majority. Yep, you're seeing them live picks out of New Delhi now, where, of course, they're beginning those vote counts in the world's largest election. Of course, we talk about it's gone for 6 weeks. It's been multiple phases, so we'll see how quickly these results will start trickling in, but we'll bring you the latest once we do get those votes being counted as well. So there's that story, and then we're also focusing on Japan. Yeah, because the story there is a corporate story, and we are going into the lunch break over in Tokyo right now. So around the last 24 hours or so, this news out of Toyota, right? So Japan is suspending. It's a Japanese story. It's really more to do with the car market. Toyota is part of it. So Japan is suspending the delivery and sale of at least 6 vehicle models as the safety scandal continues to escalate. So shares were down yesterday. Shares were down in the U.S. Shares were down slightly in Tokyo in the morning session. The transport ministry has then chimed in and said they have Toyota, Honda, and Mazda among the car makers, or 5 car makers, that then falsified or manipulated the certification data. Let's hear, in fact, from the chairman of the company, Toyota Chairman Akio Toyoda, who issued this apology on Monday. Have a look.
グループ内で問題が発生しておりますことに対しまし、トヨタグループの責任者として、
As the person responsible for the Toyota Group, I would like to extend my sincere apology to our customers, all automotive enthusiasts and stakeholders.
Sincere apology there from the chairman. Let's bring in Reed Stevenson, our senior editor in Tokyo, for us. Reed, so, I mean, we've seen this time and time again. We're back here yet again to talk about this. But what's specific about this story you think that our global viewers should know about?
Indeed. I mean, just a few months ago, Akio, who you just saw, held a press conference saying, he was going to personally take care of this issue. And again, we're sort of back to where we began. I mean, to a certain extent, this is about certification. And in Toyota's case specifically, it's suspending 3 models, and then the rest are sort of already out of production. But the issue here is really reputational. I mean, Toyota is Japan's biggest automaker, the world's largest automaker, and the most profitable, and it's consequential. And they set a benchmark to a certain extent, not just for themselves, but for other automakers, and also the vast supplier network, which in total employs about 5.5 million people across Japan. So really, as we've discussed, the shares haven't shown much of a reaction, but in terms of public perception and as sort of, you know, the company that sets the benchmark, I mean, this is going to be a tough period for the company and for Chairman Akio Toyoda to overcome.
So, Reid, I mean, we talked about this is not the first time that Japanese automakers have been through scandals like this before. I'm just wondering, why does this keep happening? I mean, you mentioned the trust factor here. Is this really now a chance to really re-examine some of these testing procedures, for example?
Indeed, there's already a little bit of discussion around really whether these certification levels are maybe too stringent. I mean, the reality is that, you know, these cars are actually on the road. They're not being recalled. It's not an issue around defects, but it's about sort of clearing certain regulatory hurdles in order to get them to market. And to a certain extent, you know, they can legitimately say the cars are doing fine. In fact, investors also don't seem to be too concerned. In fact, Toyota shares are up significantly this year. And really, the thing to watch out for here is sort of to what extent they're going to contain a reputational hit. In fact, we're going to have Toyota's shareholder meeting later this month, where a couple investors groups, Glass Lewis and ISS, have actually recommended against the chairman's reappointment precisely because of these issues stemming back all the way to last year as well.
Reid, we forgot to ask you this. What models actually are affected here? What three models?
Off the top of my head, I know one of them is the Yaris crossover. They're sort of the compact SUV crossover models. I'm not so sure they're actually sold that widely outside Japan.
Okay, well, Reid, thank you so much for getting us up to speed. Reid Stevenson there, our senior editor in Tokyo for us, getting us up to speed on this, no pun intended, of course, on this story in Toyota. There we go. Okay, straight back from Tokyo to India. This is Delhi, of course, live pictures there where counting has begun in these recent, for these recent elections. There we go.
Yeah, so, yeah, this is going to keep trickling down. Of course, we're going to have more analysis from Haz, who's on the ground there in New Delhi. But, yes, we talk about this process that took 6 weeks to go. I don't know how long the counting is going to take. So we'll bring you the latest once we get an update here. But, yes, the exit polls do suggest, and markets as well, that Narendra Modi on track for that big election victory. Plenty more ahead. This is Bloomberg.
Okay, so we're looking at live pictures now where voting has begun in India. Exit polls suggesting, and certainly when you look at price action, exit polls suggesting or showing that Narendra Modi is on track, not just for a win, but a very big win, big election victory there. Right on side of your screens are futures and some of these ETFs tracking, and which look to show that the rally might, perhaps not to the extent of Monday, are set to continue amidst what's really been a fairly sluggish and lackluster trading for risk assets in the region today. So maybe something for investors to sink their teeth in. We'll get you more details, of course, once we do get more headlines coming through on your Bloomberg terminals on this election. But as far as markets go, they have decided really on what this election actually looked like as far as investment implications are concerned.
Yeah, and is this going to be enough, you know, to bring back those foreign investors back into this market? Because what's really driven this rally so far has been the retail side of things, this rotation out of China, obviously also the fundamentals, right? The GDP reports that we've seen have been still quite resilient in this economy as well. So it seems like at least we might get that tick from that foreign demand, what if, in fact, these exit polls are true. Joining us now with analysis is Jabin Thomas Jacob, Associate Professor at the Department of International Relations and Governance Studies at Shiv Nadar University. Jabin, it's great to have you on. Obviously, you focus on international relations, so I have to ask you about what a Modi's third term would look like when it comes to a foreign policy perspective, right? He has tried to grasp on this sort of geopolitical sweet spot for India amid these rising tensions between U.S. and China. What are his priorities going to be in this next term?
I think there will be a great deal of continuity, but I think this term will also have him grappling with some serious issues where he will have to make choices. I think first and foremost is the border problem with China. Then I think I'm sure the West, the US, will also push India to take more of a stronger position on the Russia-Ukraine conflict. I think the third major conflict that India might have to get involved in some way or the other is the Israel-Hamas conflict. But from our point of view, from the Indian point of view, the most important challenge remains China.
In what sense?
Well, the border tensions have been ongoing since 2020. We've not managed to disengage and de-escalate at the border since the Galwan clashes, which saw fatalities on both sides in the summer of 2020. While negotiations between the two militaries have been going on, they've been extremely slow. From the Indian point of view, I would say that the Chinese have been setting the pace, both in terms of how transgressions have been happening over the LAC, the line of actual control between the two sides over the last decade and more, as well as now currently in the negotiations. So this is a logjam that India will have to break out of. Otherwise, I think it also affects, India's reputation in the region. I mean, if India cannot deal with China, despite its size and strength, then there is very little hope for smaller countries in the neighborhood, as well as further afield, say in Southeast Asia.
Yeah, that's interesting that you phrased it that way, because I know, Professor, you've come out and said that India needs to take a more proactive stance in China. Size and strength you mentioned, do you think India is at a point where it is of a certain size and a certain strength to start pushing back against the Chinese?
Well, I think India has already been pushing back at multiple levels. The problem really is that it's not been pushing back enough where there's the greatest visibility. And the greatest visibility is obviously on the border with China. India has, as part of the Quad, been engaged in several non-traditional security measures. India has been selling weapons to the Philippines, for example. India has pushed back against Chinese influence in its own immediate neighborhood in South Asia. But I think the problem really is that there is no pushback, whether from India or from the United States, to China's out-and-out military measures or maneuvers in China's neighborhood. And I think that is where India will have to make a difference, at least over the next 5 years. I don't expect the next 5 years to be peaceful on the LAC, because I think it is inherent or inbuilt in the Chinese system that they'll have to keep things going. That's the way Communist Party of China General Secretary Xi Jinping has actually shaped the political and the military system in China. So, India will have to respond like for like at the LAC if it is to deter China from, scaling up its transgressions on the LAC. So there has to be some sort of a response on the LAC when China does something on the LAC, not elsewhere.
Jabin, hold on a second. We just have some breaking news. Some of the initial vote counting has been tallied here, and this is according to local media. I think local TV stations are now reporting that the Modi alliance is leading in 93 seats in postal ballots that are being counted here right now. So we're still a long ways away, but we're seeing so far securing 93 of those seats. And of course, we've been talking about that supermajority and whether they can get to that 400. Jabin, I'll bring it back to you. I mean, obviously, you talk a little more about, it seems unlikely that we're going to see much change between India and China relations. There is a new Chinese ambassador to India now. Might that bring some sort of thaw between the two countries?
I think it is unlikely. I think, first of all, you have to remember the Chinese took over a year and more to appoint an ambassador to New Delhi. So I don't think the appointment of an ambassador at this stage particularly matters or changes things. Policy is set right at the top, and our understanding is that policy set in Beijing does not seek compromise or engagement with India. In Beijing, the view is that India acts in concert with the United States, and given that the Chinese see, the Communist Party sees the West in some sort of an existential threat, that also affects India-China relations.
And maybe just to bring it up as well here, in South Asia specifically, so we're talking Sri Lanka, Maldives, maybe let's even toss in Bangladesh there, where you are getting, at least to some extent, the Chinese starting to exert their influence in that part of the world. What do you think the opportunities are for Modi to maybe push back, if that's a question? How do you see dynamics in South Asia now, of course, that we might have a third term, of course, in Modi, again, within, of course, the conversation we're having right now in China?
Well, I think the record shows that Chinese influence in countries like Sri Lanka and Maldives has ebbed and flowed. In none of those countries have the Chinese managed, to have a government in place that was consistently in support or have governments supporting China or being pro-China one consecutive terms. So there is actually pushback even at the level of the local population. There are concerns about Chinese investments, Chinese influence that is now building up in South Asia. The more bigger China gets, the more people become aware of what China is doing. I mean, you take a case of Pakistan. I mean, Pakistan and China are, described as all-weather friends. But there is a huge deal of opposition to the second phase of the China-Pakistan economic corridor in Pakistan. So I think that's the reality that we're dealing with. China does not have a free hand. It does not have smooth sailing in any of these countries. And India has, at least, like I mentioned earlier, at least in South Asia, India has sort of upped its game and been pushing back. But not pushing back, in a very obvious, political way. But it's actually tried to do what India has been doing best in terms of development support, in terms of economic support. I mean, when Sri Lanka was in an economic crisis, it was India that came to its aid first, not the Chinese. And I think our neighbors understand, the effect that geography has on bilateral ties and on their international relations.
Jabin, thank you so much for your time. Jabin Thomas Jacob, the Associate Professor from the Department of International Relations and Governance Studies at the Shiv Nadar University, joining us there from Bengaluru. Right, going into the open, of course, in India, just watch out very closely. Futures are still higher, although last few minutes or so have pulled back from highs of the day. Lots more analysis, of course, on the Indian elections in the next hour, of course, with the Hindu's diplomatic editor, and also we're joined out of Edelweiss Asset Management to talk us through, of course, those certain angles to the India election story. Plenty more ahead. This is Bloomberg. Now, Hong Kong police have reportedly arrested an 8th person over social media posts linked to the 1989 Tiananmen Square crackdown. The South China Morning Post says the 62-year-old man is an uncle of an activist, Chow Hang Tong, who was one of the 7 people arrested last week under the city's self-imposed national security law. Now, police have been out in force in key locations in Hong Kong ahead of today's 35th anniversary of the crackdown, which until 2020 was marked with large vigils in the city.
The threat to national security is real, and such activities can happen all of a sudden, and different people may use different excuses to hide their intention. Hong Kong government will ensure that all activities that take place in public must be conducted within the law, and any activities that contravene the law enforcement agencies will take action accordingly.
And that was John Lee, the chief executive, speaking a short time ago when asked about the clampdown on Tiananmen commemorations. Let's bring in our Bloomberg Opinion columnist, Karishma Vashwani. She sees that Beijing successfully managing the Tiananmen narrative in all the territories it controls, and she joins us now from Singapore. And Karishma, interesting piece. You argue that the world should not forget about those terrible events 35 years ago. Why not?
Well, Yvonne, the simple answer is because it would allow the Chinese Communist Party to dictate the kind of country that China is. If you cast your mind back, 35 years ago, young men and women were on the streets in China demanding democracy, dreaming of a vision of a different country, their motherland, basically, their homeland, where they wanted to see a more liberal China come to bear. That hasn't happened as China has become more richer, rather, I should say. It hasn't become more free. And as a result, the Chinese Communist Party has dictated the narrative of what happened in 1989. Now, up until that point, over the last 3 decades or so, where we have seen these kinds of vigils being commemorated is right in Hong Kong. But we've just heard, as your introduction pointed out, from John Lee, that these kinds of events can no longer happen because of what he calls a threat to national security. Now, I was speaking with a student leader from Tiananmen days, Zhou Fengshou, who said to me that the anniversary has taken on even bigger importance this year, precisely because of what's happening in Hong Kong. He says the deteriorating situation in Hong Kong has meant that people need to pay more attention to what happened in Tiananmen in 1989.
So where is the anniversary being marked these days, Karishma?
Well, one key place, David, is Taiwan. Now, from my understanding, there will be key ceremonies being held there. There'll be vigils, an opportunity for people to pay their respects. And I think this is really interesting because another thing that Zhou Fengshou said to me is that what has happened in Hong Kong is what the Chinese government wants to have happen in Taiwan. Now, there will also be events around the world where Hong Kongers have gathered in the US and the UK, for instance, but Taiwan will really be the focal point of remembrance for 1989 and what happened in Tiananmen 35 years ago. And it's an opportunity for Taiwan to also celebrate its democracy, something that obviously irks Beijing no end. I was at the Shangri-La Dialogue over the weekend where we heard from the Chinese defense minister who talked again about the sovereignty of the Chinese nation and how Taiwan is an inalienable part of China, something that obviously the Taiwanese see as quite different.
Karishma Vaswani there, our Bloomberg Opinion columnist in Singapore for us. Right, just looking at markets at this time in the morning here, you know what, it's extremely quiet out there right now. We're trading sideways in most parts of the equity, but with the exception of India. But you know what, price action in the last 10 minutes or so is gravitating within that, into that direction. 0.3% to the upside here on some of these ETFs, so the A50 futures are now effectively flat after being higher by about 0.4%. We're coming up, by the way, a 3-4% move anyway in the cash markets in India on Monday. So stay tuned for that. And also, of course, coming through all the election results as we continue to watch the ongoing count, of course, over there in India.
Yep, the latest is 93 seats that this Modi alliance has been able to secure in these postal ballots. According to local media, at least 272 votes are needed for that majority. So just keep that in mind throughout the day here. GMM's not looking too good here. It's a pretty mixed picture across equities, but the dollar seems to be still a little bit on the softer side as well. And commodities continue to watch what's going on. Oil, that seems to be roiling some of the commodity complex here today. And bonds continue in this region to be bid up. That's it for the China Show. Bloomberg Markets Asia is next.